Hello traders, Gary Wagner here. It's just after 10 o'clock in Honolulu, 4 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands, the 11th day of October 2013. And this is the daily report for gold and silver, our weekend review. What a week, what a day. Major meltdown in the markets as we go into an impasse, I believe, day 9 right now. And this October 17th being the deadline, obviously. Currently, we're off about $16 on the day on gold, down about 1.24%. Roughly 1270 is our current print. Our low is 1261.80 and the high of 1295.40. Silver didn't fare that much better today, but as you can see from the same 30-minute chart, it has been on a different path, and we'll talk about that on today's show. Currently, it is trading off about 37 cents on the day, 21.62, low 20.93, high 21.85, puts it off about 1.68% on the day. You know, nothing, it seems, has been able to take silver out of the rapid declining prices that really has been the characteristics of the marketplace itself. We talked about all throughout this week, a little bit last week, the fact that when we looked at this market and looked at these series of highs that we had a series of descending highs, meaning lower highs. You can see that as we move down this particular downslope here. However, although we had a series of lower lows in the marketplace, the other real characteristic of the marketplace, and that was up till just recently, is we had in essence a flat bottom, or a marketplace that had hit this particular area of 1300, traded off of it effectively. It tried at this point actually to sustain that, but broke through 1300 right here, did come back up. But as we approach the apex of this compression pattern that we have identified, when it broke, you can see it broke hard and it broke with a vengeance. So the real question has to be, where could the market go from here, and what are the various levels of support that we're currently looking at in the market? Now, the best way for us to ascertain that, at least that I know of, is to run a couple of different Fibonacci retracements. And I have one major retracement that I'm running the entire span of this last rally from about 1181 up to about 1435, and we've put in all of the different levels that have significance in terms of our Fib retracement. 23, 38, 50, 61, and 76 has now come into play. And the reason that I say that is when we look at the 61% retracement, that was a pretty critical area that we have held in the past. When we consider market comes up and on its first leg down, it pretty much finds support approximately, you can see it dip below that, but approximately at the 50% level. That number was significant because that's your $1,300 mark, 1306. We've talked about that infinitum. Market comes back up, finds real resistance at 1373. As it comes back down, it finds support again at 1300. But the next rally, of course, would not be nearly as significant because it failed really to move past or find any kind of support at around 1430, 1435, 1335, excuse me, that being a pretty critical area in the market. And once it came down, we saw a new level form, and that new level was the 61% retracement level at around 1275. Well, traders, today we broke through that. And as we go into the close of the market, you can see there's a little green coming in this next candle, but to me that's not really significant because that could simply be due to short covering or other variables. The key is this: right now there is a good or a high probability that the current crisis in the United States regarding the debt ceiling, not the budget deficit, but the debt ceiling itself, will get resolved, and resolved rather quickly. I don't really think they'll let it go to the October 17th deadline. However, the real issue, the issue that the Republicans and the Democrats are really wrapped in a vicious fight about is the budget deficit, which is now well above $17 trillion, and trying to put a handle on it. My sense is that anything can change on a moment's notice, and that's because if they continue to have an impasse, we could get a bullish effect. But as long as this market is unfolding with a normal sequence of events, meaning there's bickering, but then there's a resolvement or a compromise in the conflict, we could see continued pressure in gold. And so the next real level that we want to look at is about 1235, because that is a 76% retracement level. However, traders, to me, that is not really the real critical area that we need to watch, because the real level that I'm actually concerned with at this moment is whether or not gold might make a play for these intraday lows that we hit back in July of last year of 1181. Now, why do I have that concern? Well, obviously, as this market came up, hit this record top, as it came down, we did have a fairly strong band of support that was sitting at 1274. We had one occasion here in which the market touched down and traded off of it, shows support. And of course, this low here that we had back in August was also indicative of a critical area of support, and you can see that it has breached that at this point. So although there is another fib retracement level below 1274, meaning right here we're closed right now at about 1270, this to me is a fairly minor level. It's a 76% level, but when we look historically at any kind of price action, we don't really get any clear-cut sense that it was either resistance or support in this particular area. And because of that, my sense is that if the market falls under pressure, this might be a temporary bridge to hold the market up, but I don't see it sustaining if there continues to be any downside pressure. The other reason that I am concerned about really looking at lower pricing is our current Elliott wave count. And our current Elliott wave count puts us in a wave 5 right now. That's after this wave 4 was composed of an A, B, and a C, and this tremendously long wave 3 that had either a 5 or 7 count depending on how you look at it. But what really concerns me about our current state in terms of our Elliott wave count, if we have wave 3, wave 4, we talked about just the other day how that came to a 38% retracement of the move down. If we are in fact in wave 5, at minimum to have what's called a flat, meaning 3 and 5 being equal, we will come and test these lows at around 1180. And when we stand back, of course, we're looking at a 3-day chart. This has our most current Elliott wave count in terms of major and intermediate count. When we look at it, basically standing back, and we can see this is wave 1, wave 2, long wave 3, wave 4 comes to a acceptable level in terms of how far it came back up. If we are now in wave 5, wave 5, just as a flat, would take us to 1181, and if it's a traditional zigzag, we could be looking at 1014, because that is a 76% retracement of this entire rally, and these are some really key points to watch. One of the reasons to me that 1191 is such a critical number is that is a 61% retracement of this large move. So it is my concern and belief that we could have additional pressure to the downside, and we could look to challenge this most recent low at 1181. Of course, this market is moving, or turning on a dime, I should say, as news comes out of the market. And if in fact we see that the issues that are currently in Washington begin to unravel, begin to really change direction from the belief right now that they are on the path to compromise, that they are on the path to reaching some sort of solution. If that does break down next week, you could look for anything to happen, and you could look for a tremendous spike to the upside in the metals markets. And so for that reason, I have real concern, but at the same time, we want to be cautious and watch this market really closely. Now, we talked about this throughout the week. And what we talked about in a little bit at the beginning of the show, I just want to look at it in another way. These descending tops, this was our previous support area, and we had a clear and definitive break below that. As we look at this chart, it's quite evident that the market, though, has actually gone to a fairly interesting point. The interesting point is 1250. And 1250 is an interesting top in that when we look at historically what happened back in 2010, the market comes up and it's really stalls at 1250. You had these series of tops that came in and couldn't breach it before the market actually retraced a little bit, I believe back to about 1100, and then went on its upward journey. So this particular area is a logical area, I should say, to look for some support to come into the market. And as I said, because of the fact that anything can change on a dime as new news comes out in the market, we want to be aware of these different support levels so that if we get the kind of upside bounce that could come with news coming out of Washington that they're at an impasse, we would see this standing as that support area right in here. Although when we simply look at the charts right now, the pressure has to be deemed as downside pressure. Now, although silver has been coming down, we're looking at a weekly chart, Japanese average format. Of course, this kind of takes the noise out of the market. The one thing that we looked at when we saw our daily chart is that we had really these upticks that came in as the market hit these lows just below 20 and moved back up, trading now at 2134. Support right now in silver is still right at 2080, we'll call it 2080. That's a 61% retracement area. And although we broke through the 61% retracement area, the corresponding level in gold, and the corresponding level in gold was the 1305 area, that was also a 61% retracement. When I say retracement, I'm just speaking about this most recent rally from here to here and retracing down to 61%. We saw gold break through that point and break through it with a vengeance. But silver, although it is drastically lower on the day, on the week, and over the month, has shown more resilience than we have seen in gold. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review, and our most recent chart this will go live from our interview that we did today. Bye-bye.